What's going on? Blake here. As always, none of this is financial advice. Trade and invest at your own risk. This video is going to get you more prepared for price action this week. So, what's changed? Not much. We are in an aggressive downtrend, and on the weekly time frame, you can see we just continually put in new lows each and every week. So, yeah, what are the odds favoring? Odds are still favoring lower prices because we follow the trend, and as long as the trend is in a downtrend, especially on the higher time frames, the weekly, the monthly, and if we take a look at the daily, you guys already know, yeah, we're in a pretty nasty downtrend. So we've had two uptrends this year. So the start of the year basically was, yeah, this top that we put in on January 4th was the top. So this year we've had, like I said, two uptrends. We had one back here started in early February. You had 3 days to get paid. And then, we got sloppy again, broke trend, new downtrend. We had another uptrend back here in the middle of March that actually paid really, really well. So we were able to capitalize on this uptrend. And those are the only two uptrends that we've had this year. This isn't an uptrend because we had no trend and no close higher than that close and then just gave it all back. So right back into downtrend. And we talked about getting trapped above here. And that's exactly what happened. Boom, right back into downtrend. This here also not an uptrend. It's another trap. You can see close inside the cloud, get everybody long, and then boom, another right back into downtrend. Smacked out a no trend into downtrend. And then most recently, yeah, this previous week as well, gapped up, had a strong day, closed inside the cloud above the 10 SMA. Yeah, another trap, boom, right back into downtrend. So that's been the trend lately, right? We've seen three different traps over the course of, since April 20th. Trap, trap, trap. And these were not uptrends. These were no trends. And as we always say, in no trend and downtrend, our number one priority is always preservation of capital. So if you're not aggressive and you're not, taking a small position, putting in a stop at your entry, if you've scaled and getting stopped out on, smaller size positions, you're not taking any trades at all, and you're winning. You're winning if you are sitting out this market because as equity prices fall, your buying power sitting in cash continues to be more powerful and a lot more. You can buy more shares at lower prices if that's the case. So I wanted to talk about today, what's my take and where am I going to get long, right? So as always, get aggressively long above the cloud. So this is the 10 and the 50, aggressively long above the cloud. You can see I have a level 430 roughly, on the S&P. I think that's, a very important level to get aggressively long. And above there, I will get aggressively long. But until then, I'm still cautious and expecting lower prices. I think this market can go lower, and it wouldn't surprise me at all. So let me see if I draw a fib from the COVID lows up to the highs. You can see we've only came back and tested the 0.382 fib. Okay, we haven't even came back to the 50% fib. And, the 618 is, a very important Fibonacci. So, I wouldn't be surprised if we break below this 380 level and come screaming down, to this 350 level. And I think that'd be a pretty good place to potentially bounce and buy the dip. But as always, we're not going to front run it. We're going to let price tell us what to do, just like price told us what to do back here. Hey, we've had a massive rally. We bull flag above the cloud, and then we just take off, right? That's when we get aggressively long. And we can see this pattern over and over. We get above the cloud. We start trading with trend, right? Above the cloud, aggressively long, get paid, right? Above the cloud, aggressively long, get paid. Same here, above the cloud, aggressively long, get paid. This was a little payday, right? So this pattern repeats, all right? So that's why when we're trading, we trade with the odds in our favor because the market is going to give us better odds. And if you're patient enough, and you have enough discipline, and you're not just cowboying it and shooting from the hip, and you're taking swing long positions in a downtrend and getting destroyed, yeah, you're crushing it, right? So if you're being patient and waiting, we're gonna have better odds, and that's what I'm doing. I'm just waiting, right? If I have to get in at higher prices, I get in at higher prices. But at the same token, if price decides to continue to drop, well, this 58 MA top of this cloud is also going to drop with it, and maybe I can get in at lower prices still. So yeah, long story short, just be careful, right? This is a down market, and it wouldn't surprise me if we go lower. Now, one thing I wanted to highlight here is, you can see we're getting a lot of a lot of price action in this range, right? So I talked about if there'd be two ways that we could get long. If we double bottom and then get above Tuesday's high. So above Tuesday's high, above 408.57 or SPY, I think you could take that for a trade. And, I wouldn't be expecting too much. I wouldn't be expecting the moon. But yeah, maybe a couple points, and you can scale and put your stop in and limit your expectations. So far, this is double bottom, right? We've held this level. We've tested it twice. And granted, Friday was OPEC, so take this candle with a grain of salt. But, if we get above Tuesday's high, I think this double bottom is significant, and it can be a tradable move, potentially, up to the 424, 425 area on SPY. So keep a close eye on 408.57. That was last Tuesday's high. Above that, I will get long, right? Other than that, I'm just being very patient. I'm waiting because this type of market likes to chop you up, and we are traditionally trend followers and breakout traders, and the market has been punishing people that are front running these breakouts, right? So you've seen three different traps: trap, 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 right? The market has just been punishing people that have been trying to call the bottom and trying to get long, and then just to reverse it lower. So we've had a lot of price action where we come and test previous highs. We actually break through it, and then we come into, some buy stops just to liquidate those people that are trying to cover, and then boom, push them lower again. So very important market structure to pay attention to. So yeah, patience is the game. Patience is key. And this market looks still weak. Now, can we see a flush lower? Yeah. But can we see this kind of dribble and then move higher? Absolutely. We're not going to predict price. We're going to react to it. And, we're really oversold. So I wouldn't be surprised if we do have, a pretty aggressive rally, potentially even this next week, just based off of this price action. So keep a close eye on the market. Nasdaq is a little weaker. You can see I do have a fib on here as well. The Nasdaq from the COVID lows. The S&P only came back to the 38.2 fib. And you can see the Nasdaq did come and test that 50 fib, so that 286 level on QQQ. And once again, double bottom so far, right? I don't want to call this yet, but double bottom. We have two candles touching this 50 fib and holding it. Ideally, I'd like to see, a move obviously above into the cloud and then above Tuesday's high. Once again, I think that is a tradable trade. And once again, limit your expectations, maybe, something up to 315, a previous fib, and then maybe another leg lower. Like I said, we're not predicting this market. Last week's video, I kind of did predict last week's market. But, once again, we're just going to be reacting to price. Let's take a look at bonds. Bonds are actually looking pretty decent. So, yeah, and I don't think this is so far a significant move, because I still think, rates are going to go higher and bonds obviously are going to suffer from that. I think that's inevitable, which we've seen this move. As rates move higher, bonds are moving lower. But I think that you could see potentially if the market does roll over and we, worst case scenario, we revisit that 618, fib retracement from the COVID lows. Yeah, I think we probably could see a flight to quality, not necessarily safety, because bonds are, in my opinion, not a great hedge with what's going on at a macro level. But we could see a flight to safety in TLT and bonds. So we're going to monitor this. You guys know I'm not really bullish bonds, but at the same token, I don't want to see the investment portfolio experience a larger drawdown. So we could see more of a position in bonds potentially this week. So pay close attention to the investment portfolio this week. Let's take a look at crypto. You guys know I've been very bullish crypto, since 2017, really. Those of you that have followed me that long. And I think Bitcoin and Ethereum, as I say, long term prices are much higher. Short term, this kind of looks like a bear flag. I'm not gonna sugarcoat it. A move lower, consolidate. Near resistance, and you can see I have this area highlighted. This is a very important level. This price range is a price range that we've revisited a few different times since really the beginning of January of 2021. So a little over a year and a half. So yeah, pay close attention to this level. This could act as support, right? And this could be a great buy-in opportunity. And Bitcoin could bounce from here. But at the same token, if we lose this level, if we lose this area, there is not much support because you can see there's really not a whole lot of price structure, price history, moving on this move. So where would I expect to find support? Maybe in the 22,000 area, potentially in the 20,000 area. So, just be cautious with Bitcoin. It could move, another 30% lower from here. So be cautious. That being said, this could be a great buying opportunity if this holds as support. And you can see I do have an alert set at basically this 32,000 area. I think above 32,000, we could see a tradable rally potentially up to the 50 MA right around 37,000. So keep close on Bitcoin. Ethereum looks very similar. Ethereum, 2,200 is my level I'm watching. And I think both of these they look ugly right now. They absolutely could go lower. But it's really hard to sell or to take a short position because we are so far deviated from the highs. I mean, we're, from 40, basically 5,000 to 2,000. I mean, it's over a 50% correction. So that's a significant correction, right? So keep a close eye on Ethereum. Also keep a close eye on Bitcoin. These things could be setting up, but they also could just be consolidating before another breakdown. As always, we're not going to predict price. We're going to react to it. Those of you that are holding, for more than, 2 years, 24 months, I think you're fine. I think this is, just a bump in the road. Gold, we did blow out of our gold position. I do like the way that this is setting back up again. We could take another position in gold just because, we did gap up and we're back inside the cloud. And, on the weekly time frame, it doesn't look terrible either. The weekly looks decent. You can see we're trying to hold that 50. We got out because we broke trend, right? So similar to, like we treat the daily time frame with swing positions in the investment portfolio, similar approach, right? We just use a higher time frame and we broke trend. So we're back inside the clouds. So that's a positive sign. So we're going to monitor gold this week and see what happens. Potentially that may find its way back into our portfolio. And then also I want to wrap up XLE. This still looks constructive, right? This out of all of the sectors is showing the most relative strength. So if we look at the monthly time frame, we've had a massive move, but we're trading at levels that we saw, already back in 08, right? We're trading at 08 levels essentially. So this can be a bigger move to the upside. We can continue to see momentum and strength. And you'd expect to see a pause right here, right? So this area, put that in there. This previous high, right? There's a lot of price action here, which is what you would expect to see. So it would not surprise me if we came back down to this area again, maybe even below it, maybe to 75 even. And if that happens, I'm going to be watching and seeing what happens if this reclaims this level. If it does, I think it's, to the races back to 90 and potentially the new highs. So I'm still bullish the energy sector. I think that's likely the best place to park money right now if you're, not sitting in cash, which is why we have a 30% allocation in our investment portfolio. So just to wrap up, S&P is still weak. I want to see us above Tuesday's high before I can get confident with a long exposure for a tradable move. Like I said, if that does happen, I'm not going to be calling the bottom and saying, okay, this is going back to new highs. That's very unlikely. It's much more likely that we get above here. If we get above here, we have a nice little rally, maybe up to previous, breakdown 420 area, and then another leg lower. So just be cautious. If you are shorting, it's really difficult to short down here, especially in bear markets. Stay in swing short. They're going to try to shake you out because we're going to see, 4-day rallies just to give it all back in bear markets. So if you can't stomach that volatility, just wait patiently for the next uptrend, get long then, and ride that trend, right? So this week, we're going to be once again playing it slow. We still have our bear hat on. Still not too bullish on this market, but if we see price structure improve, we'll take some trades. That's all I got for you guys this week. I'll see you on Monday.